IAS 10, or the International Accounting Standard 10, is a financial reporting standard that deals with events after the reporting period. It outlines the treatment and disclosure requirements for events that occur after the end of the reporting period, but before the financial statements are authorized for issue. Here is a summary of key points from IAS 10. Events after the reporting period. IAS 10 distinguishes between two types of events: those that provide evidence of conditions that existed at the end of the reporting period, adjusting events, and those that are indicative of conditions that arose after the reporting period, non-adjusting events. Adjusting events. Adjusting events are events that provide additional evidence of conditions that existed at the end of the reporting period. If new information becomes available after the reporting period and indicates that adjustments are necessary, the financial statements should be adjusted. Non-adjusting events. Non-adjusting events are events that are indicative of conditions that arose after the reporting period. These events do not result in adjustments to the financial statements, but require disclosure. If non-adjusting events are material, their nature and estimated financial effects should be disclosed. Dividends. The declaration of dividends after the reporting period is considered a non-adjusting event and does not result in the recognition of a liability in the financial statements. However, the payment of dividends subsequent to the reporting period is recognized as a liability. Disclosure requirement. IAS 10 requires disclosure of the date when the financial statements were authorized for issue and who gave that authorization. If an entity receives information after the reporting period about conditions that existed at the end of the reporting period, it should disclose that information. Subsequent events review. Management is required to review events after the reporting period until the date the financial statements are authorized for issue. If the review identifies the need for adjustments or additional disclosures, these should be made. In summary, IAS 10 provides guidance on the treatment of events that occur after the reporting period. It emphasizes the importance of distinguishing between adjusting and non-adjusting events and requires appropriate disclosure to ensure that financial statement users have relevant and reliable information.